All right, good morning. It is Friday, July 16th. Happy Friday, everyone. We've had a pretty solid week overall, and welcome back, Brian. Next week you'll be back with Todd, so feel free to mention how much more fun you've had with me.
You will instantly grow all your hair back again and get glasses.
Yeah, pretty much.
That was a joke. I was gonna mess with Todd. I was like, I had some guy last week that got laser surgery. It fixed his glasses, but it burned off all his hair. So,
That'd be about right. Right. Just the age. Mm-hmm. We've got quite a bit to talk about today, and before we hop in, quick disclosure: trading involves risk. All right? Anytime you put money into a market, you can lose that money. We're here for educational purposes. Please don't take these as trade recommendations. Our goal here is to really show you how Brian does the analysis, talk about the markets and what we look at when we're looking at setting up trades. So any trading decisions you make, you need to take accountability for them, and you need to put in the work. That's one of the things over the years that I've seen a lot of people not want to do. So that's why we're here to help instruct you on how to put in that work. So with that, Brian, let's kick right into it.
Yeah. So there's some interesting data points that have come out. One of the ones we talked about yesterday that I said, although we cannot trade it necessarily on Nadex, it's important to understand because of the global kind of how everything is interconnected now. New Zealand had CPI last night. You guys should be familiar with what CPI is right now. We've been talking about it, the month over month, the year over year, the quarter over year. They've been coming out, and every single one of them has been high. Well, New Zealand, they had their quarter over quarter CPI coming in at 1.3 versus the 1.7 forecast. Now, again, this is like the drinking game now, right? Transitory inflation. They're not saying transitory inflation. And in fact, this is the headline right now. There's a 90% chance of August rate hike after inflation balloons to 3.3%. 90% chance. So they will be the first country now that is starting to raise interest rates to curb inflation. Canada has made comments, a couple other countries, and they keep saying transitory, but guess what? New Zealand is not messing around with that word. They don't want all this inflation there because of the problems that it causes on the back end of things. So we've officially had a break in the standard. It's transitory. It's all going away. Somebody is already talking about raising it. Now, looking into today, if you guys were attending this week, I mentioned that core retail sales is typically one of the big 5 news releases that occurs. Obviously non-farm is up there. Our interest rates are already big, but core retail sales and CPI are probably battling between that number 2 and number 3 spot. We mentioned that it was a very interesting, news kind of forecast this week because one was positive at 0.4, and then the retail sales number was coming in at minus 0.4. And I mentioned if they are both negative or both positive, that would be a pretty big mover for the market. The way that things were unfolding yesterday with the news that we saw yesterday morning, with all the red numbers, Philly Fed was down, manufacturing production was down, unemployment claims, we said that yesterday was more than likely to be a red day, but it was setting us up for a feel-good Friday. Having these type of numbers coming in, right, again, core retail sales 3 times higher, extremely positive note for the overall market. We'll see what the consumer sentiment number comes in. It's supposed to be higher than expected, or higher than the previous. And again, typically, if you're seeing retail sales numbers this high, confidence tends to be higher as well. It's not going to be as big of a mover as the retail sales number, but again, if people are spending money, they're typically confident. If you're not confident in the economy, you're more saving, you're not really spending, is typically how it works out. Besides that, there's not really a whole lot of news down here. Palace staying dovish, we've kind of known that. Again, that's why gold is really coming back down again. And like I said, we now have other countries talking about raising interest rates with a 90% chance, and yet the Fed is still saying, not till 2023. We're going to let it run hot for a while, right? July, I never said that. It's kind of one of those things all over again. So that's what we have. Looking at some of the markets. So NQ is one that I want to bring up today because it did get a little bit beat up yesterday. We were sitting where the yellow circle is, right, yesterday. And we mentioned if we had to break below, we had this large space that we could kind of overtake. And again, remember, a lot of the trade setups and analysis that I'm doing are if this, then that based trades. This is a perfect example yesterday of that Harry Potter trade. And it's funny, somebody emailed me last week and they were like, hey, listen, where's your class on Harry Potters? I really like the way these are. And I was like, I actually don't have one. It's something that I really started sharing in these Nadex presentations, so I don't have a class on it. All the rules and everything have been given in these presentations that we've been doing in the morning for Nadex, but it's just a continuation pattern. It is funny and it's flattering when there are now people on YouTube that are talking about it and saying it. And I'm like, wow, that's exactly, you obviously listened to me because that's the way that I explain it. But here it is, guys. We talked about a break of this. And again, remember, there are aggressive trade strategies and there are more conservative trade strategies, and every single person is different. This one is really meant for a pullback. It's meant for kind of taking advantage of the trap that exists in, the support and resistance strategies. So as it broke through, we didn't get an entry at 10 o'clock in the morning. It literally just spiked through and came right back up again. There was no entry. And again, maybe some people on the aggressive stance were able to take that. They got, 1 to 1.5, maybe 1. Actually, it's probably 1 to 2, and they were happy with that. But what happened is later on, it ended up hitting, it gave us our base, it came back, it touched, and it met all our rules and gave us our push down. Now, you can see the green, it did go beyond it, but remember, I said every single trade up with that 1 to 3 risk to reward ratio is a minimum. And this is an example. If you're waiting for it to pull all the way down, it was unable to go to the opposing zone. It did go about a 4, almost a 5 to 1. But again, if you're taking it off here, again, there's no reason to be greedy and have it kick back on you, particularly because this is right around that 2 o'clock, 3 o'clock window where we expect a kind of change, right? And again, we got the kind of the end of the day rally, kind of came back up again, hit that level one more time. And if you didn't hit it again, it kind of pushed back down again. And it did come back down to the 1 to 3. So you actually had 2 shots at that one. Since that time, you can see that it's hit again, and has really been grinding through, but just going higher. With the retail sales data, I would expect this one to go higher. Today, I would be cautious with the level where we were yesterday morning, sitting right here, right there, up at what? 14,981. I'm sorry, 14,891.50. Not that I'd necessarily be looking to short that, but it'd be an area where I expect to see some kind of hiccups coming through it. There was a lot of selling pressure there before, shot it down, right back up again, and then kind of put that nail in the coffin yesterday. But that's right around a psychological number of 14,900. Again, we've had a couple of these other targets we'd like to get to. Again, if consumer sentiment is super positive today, let me switch back up to the daily real quick just so we can get a good idea here. Yeah, the daily ATR is 176 points. So let's just drop it back down to a 13. Let's talk about where we are right now and go up 176. That puts us right here. So in an average move, that takes out 15,000 for the day. Could we get it with, 3 times higher retail sales? Sure. We get a couple positive, news broadcasters. I think it's possible for today. The big question is, are we going to be able to get through 14,900? But right now, it seems like it's cruising. And again, that's just NQ. ES is already pushing forward. There's actually a knockout in here. It was drawn yesterday for my group. You can see we're well into it at this point. Right now, it is, about 20 points up on the ES in that. I think this one has less kind of sticking points, but again, there was some sellers coming in up here. Of the two, I think NQ is better, but I think this one has a little bit easier path to go higher. And then YM, the last one, the Dow. Again, the Dow is all over things like retail sales because people are buying stuff. You need to produce more stuff. And I know the production was down, but this is like one of those let's make up for it type thing. And again, with Powell being more dovish, retail sales numbers being great, you guys see that big number up there, that 35,000. I've been waiting for it. I've been waiting for it. Yeah, I've had it there. It's like, man, we're so close. We're only 55 points away. And again, do the same thing. We can bring it up to a daily, pull the daily ATR on that one, and the daily ATR is 350. Right? It's 350. If we look to see how close we are to it right now, we're 57 points away. So is that 35,000 on the radar? Yeah. Could we get up to 35,100? Yeah, that's about 150 pips if we just take half what the ATR is. So it's got room to run to the top side. I'm looking forward to it. And like I said, 35,000 will be a big psychological number. The media will be talking about it. They'll be hyping up. We just hit 35,000, and the Fed's not doing nothing. So, like I said, I think there's a lot of positivity today to end off a strong week. Again, it's that Feel Good Friday. There's great data this morning. There's a lot of things there really kind of push it to the top side. And like I said, 35,000 is a psychological number. People will be long waiting to sell when they get up there. So just keep that in mind as far as the indices go. Did you have anything you want to add into that?
I was just going to say it's transitory, Brian. I see you're taking a drink already, so perfect.
The market?
Every time you say, yep. But no, I think one of the interesting things about those, obviously 35,000, big psychological level. Everybody's been waiting for it. What do we see if we push beyond that? Is that where people go, okay, are we going to push it higher? Is it really going to break past that? Or are we going to see a little bit of...
I would assume we probably have some basing. the retail trader has not had an opportunity to take advantage of it. When I say the retail trader, I mean the guys that are like, okay, I'm waiting for that 9:30 bell to go. Once that bell goes, we can start trading. You guys are listening to this presentation, we could be trading right now. You'd be surprised. Not a lot of people actually know that. Their grandfather and their fathers, oh, this is how we trade. Once the bell rings, we start. I mean, in reality, a lot of the trading is already starting to occur right now. But that retail trader is where like the easy fish come into the market, right? They haven't reacted to that number yet. I wouldn't be surprised at the open if we see this thing surge forward and hit 35,000. There will be some profit taking, obviously, and the profit taking, what it's going to look like is a pullback. But if you think about what the negative factors are, there's really not a lot of them at this point. And again, a lot of it has to do with the Fed taking no action. They're saying that the employment situation is all screwed up, and we mentioned it yesterday. Though I was correct. The child care checks were going out yesterday, so people that have children may have seen those credits that are coming out. That's a boom, right? We saw retail sales go down because the stimulus was cut off for a lot of people, like the unemployment benefits were going off. Well, guess what? They just got, if you have kids, you just got that child credit for your kids, so you got money deposited in your account. So guess what? If retail sales looks great now, guess what's going to happen when people get an extra $250 or $500 or whatever it is for each of your kids? They're going to spend that too. So retail sales should be picking up even further. These are all the factors that you got to kind of forecast down towards the future. So, like I said, I would expect it to come up a little bit of a basing. It's like oil. If anybody was around for oil the first time it hit $100, everybody was watching. Everybody was watching. Like, all right, is it going? Is it going to hit 100? And there was that one guy that was like, oh, I'm going to buy it at 100 because I'm going to be the first person to do it. It immediately went back down when that happened, but he was really proud that he bought oil for $100 a barrel. Somebody was making a lot of money off that guy. But it'll be the same thing. Whenever you break the new highs, you tend to have a pullback as people sell. Particularly something like that. It's just got too many zeros. It's got a 5 in it. It's one of those levels that that's going to be people's target. They're like, hey, if it hits there, I'll sell. So there will be a bit of a pullback, I think, from it initially. But if we hit it right at the open, then I would say, there could be some nice extensions of that one higher. If you guys want to use the magical pixie dust, throw some fibs out there with some extensions. There'll be some levels even higher than that that people will be trying to hit. And it depends from where you take depends on where you do your extension draw from. I'm unfortunately using mine for different things in here. But yeah, you run your extensions. I'd probably run it from the level at 34,000. Run it from 34-ish to 35-ish. You can see what happens when we broke down to 34 right here. I wouldn't be surprised if we can get up to the 35, 100, 150 today if we blow through this right at the open. So other things I think we should cover too. Oil, right now it's listed as up, but you can see it had a very small kind of, there's another small day. Yesterday, we basically had a mirror. It went up and then literally came right back down again. It really didn't have much movement. And again, very, very common. It's kind of the hangover after the big kind of crazy inventory-based kind of craziness. Today, I would expect something similar. With retail sales being good, though, I would actually expect it to be more on the positive side. Again, when people are spending money, it tends to be good for people going places and things and just demand in general, showing, and again, consumer confidence as well. So I would expect up, but it's got a few levels just a little bit above it around the 72.50-ish level. So I don't know if I'd expect a huge mover today in oil. Gold, you're seeing, again, it's still considered red right now, but this is a level we talked about. And again, if I was there just to refine this down into where it popped yesterday, actually, let me go back up to 30-minute. My charts always look funky when they're on 15s. We talked about there was a knockout bracket at 1811. Obviously, all this, I'll call it traffic, right? Traffic in here. There's a lot of back and forth right before price popped. I'll change it green. You can see it right here. And then all of a sudden, boom, there was an explosion out. And it was right at 8 o'clock when kind of the U.S. market, U.S. futures traders are coming online. That's all we hit, and we're popping from it right now. I would say it's great that New Zealand wants to raise interest rates, but with the Fed really saying that we're not going to do anything, we don't care, this is all going to go away. They're in la land. It's not really the most positive news for gold. So although I still, on a fundamental base level, I do believe that gold is something that is not horrible to acquire now because we are definitely going to see inflation. It could be a much, much longer trade that is not necessarily based out, what we can do with Nadex. But again, you're seeing gold kind of rally back from the overnight, and same thing. The overnight occurred. This is silver. And you can see that silver dropped down and grabbed those levels as well. There was a call spread at 26. You can see that the European session really drove it down. And now that the U.S. traders coming online, they're taking their profit, and we're seeing a little bit of a tick back again. So the commodities are all kind of doing the same thing. And then even natural gas, you can see natural gas is, again, it's got a big reversal. And you can, if you're wondering what all this is, that would be the news from yesterday. So told you guys to watch that one. Yeah. And again, on a 5-minute level, you guys can see it, right? Actually, I'll just do it on the 15-minute level. And again, I don't know how many of you have actually tried these yet, but get out there and try these things. It's the same setup. It doesn't matter what we're trading. A chart is a chart is a chart. There would have been your natural gas inventory report. So again, we drove right up into that level and boom, collapse right back down again. So very fast movements. It doesn't matter what it is. Just know your products and go from there. But overall, I would say, even the cryptos are kind of slow today. Dogecoin back down again. TLT is up a little bit. VIX is down. You guys can see VIX is heading down a little bit. Even the dollar index is really starting to slow and coming up to levels where we've seen it kind of turn. So I'd say look for a green Friday. That's it. There's no news, no driving factors, and again, consumer confidence will be kind of the nail in the coffin for a green morning.
Yeah, it'll be interesting to see, as you mentioned, Brian, when the retail trader comes in at 8:30. And it still does surprise me, as long as I've spent most of my life, though, in currencies 24 hours in commodity and the futures world. So I was never so much bound by that. But there is still a strong mentality of, oh, no, we're waiting right until the bell, and then we're going to trade. And trading's happening right now. You can trade overnight when it's convenient for you. So
anything, most people have most of their assets in things like mutual funds. Those are not really trading in the overnight. Those are more based towards what's happening during the day. That's why a lot of times, even guys, when you're charting, sometimes you'll see on charts, like if you pick like a random stock, it looks very whippy, right? There's gaps everywhere. There's technically not gaps because there is after hours trading, but because the liquidity is so low, it's literally basically you versus like a trading computer, and they're literally going back and forth and scalping like a penny from each other, left and right. It's not really necessarily the best environment for trading. That's why you look at other things, futures, but even futures is not truly 24 hours. The volume goes way down, but like something like currencies, where and again, we'll end on this today. There's a nice little chart down here, and I told a student about it yesterday. This gives you a good idea about why it's a 24-hour market. Right? This is what happens in the world. You can see Sydney's trading session, Tokyo's trading session, London's trading session, and New York's session. And you can see why it ends today, right? 5 p.m. our time, that's it. We're done. There's nothing else for the week. But this is why Sunday night you can start to see when these are opening. And that's why even if you're not a currencies trader, right? The market is open 24 hours a day. Take advantage of that. That there's trading opportunity. The goal in trading is not to only trade one thing and be great at it. There's the ability to trade a lot of different things out there. You could trade futures during the day. You could trade indices during the morning hours. You could trade currencies at night. It's all the same. Every chart is established the same exact way. Your strategy should work on every single chart, every single time frame, no matter what you do. And if it doesn't, you got to find another one. And I'm gonna leave it with that. That's my soapbox for the morning.
I think that's a great way to head into the weekend. Hope you have a great weekend, Brian, and everyone watching. Enjoy, and Todd will be back with Brian on Monday morning. Have a great weekend.
Yep, you too.
Oh, you know what? Real quick, before I forget, I need to remind everybody here how to get in touch with us, and also that trading involves risk. This was for educational purposes only. Please don't go out, make a trade, and say, well, Brian and Dan told me to do this. Got to do the work yourself.
It was Dan. Dan did it.
It was all Dan. But actually, just say it was Todd. That was his name.
It was
on the
Todd,
title.
right? Yeah, I was just thinking that. Yeah, it was Todd. He can't defend himself this week.
Yeah, absolutely. Can he defend himself most weeks? But if you need to reach out to us, customer service at nadex.com. Follow us on Twitter, across social media. Definitely get in touch with Brian. Support at keeptradingsimple.com. He's got a great website, great education. Except for the Harry Potter, which he does not have a course on, but definitely reach out to him. Maybe you can convince him to put one out there. With that, I'm going to let everybody, just ask everybody to have a great weekend.